We detected an unusual trade worth $2.1 million on Taiwan Semiconductor stock, ticker symbol TSM. And what's also very unusual about this is that Taiwan Semiconductor reports earnings in a few days on January 16th. And so that's very concerning because these unusual options suggest that Taiwan Semiconductor could crash down after earnings. And so without further ado, let's dive into the data to find out what this wealthy investor did. As we can see here on the options time and sales tape, there were 10,000 contracts being traded for the September 19 options at the 115 strike puts. We can see the price that was being traded at, 210, and so we multiply by 100 since each option represents 100 shares of stock, and so each of these contracts cost $210. And since there was a total of 10,000 contracts, we multiply that out and we get a total trade cost of $2.1 million. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. And so if you are interested in the lower risk and higher probability of profit trades, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas based on stronger data analysis wealthy investors or potential insiders are trading. Now for this trade, how do we know that these are opening trades and not closing trades? Well, if we take a deeper look at the option chain, for these September 19 options, we can see here that at the 115 strike puts, the volume here is much greater than the open interest of only 684. So we know that it would not be possible to close out of these trades. They are not buying to close out of these put options. They are instead buying to open these put options. And you can see our position also here as well. POS stands for position. Green means buy, where they bought these put options for 210 each, as we had just calculated. And so when we analyze this trade, we can see here on the risk profile that as the share price, which is represented here on the x-axis, and the stock is currently trading right here at $200 a share, and the y-axis represents the profit loss. Note the zero break-even point here, and so when the lines are below it, it is a negative loss. And so as the share price goes down, this trade becomes more positive profitable. And if it goes up, it becomes more negative loss, because this is a short bearish trade. And we can confirm it on the Greeks here. We have a negative delta trade. If it was a bullish trade, it would be a positive delta. Now keep in mind, these put options are very out the money because the stock is trading at $200 a share and the strike price on these put options at 115. That's all the way over here. And that is why that break even for the blue line at expiration is right over here. So the stock would have to drop all the way down at expiration for those put options to be profitable. However, you can see that the purple line here, which represents the current date, actually starts to become profitable right away, which means that if the stock starts to drop even just a few to 160 or 150, or even if it just drops $10, it starts to become profitable. It is all positive gains right away. And so it is possible that this wealthy investor is hedging for earnings, that they have underlying stock shares going bullish and they bought these put options to hedge so that if the stock goes down, they would not be at a significant loss because they can close out of these put options and take profits right after earnings. This investor does not have to wait until expiration, because the longer you wait with these put options, it actually starts to decay in value. You can see this purple line starts to drop down because these have a negative theta risk here. You can see right here a negative 1.64 per put option. And so be aware of the risk of holding these put options until expiration, because they will decay in value, and so the risk will increase even more. But we are using position sizing to manage our risk. We don't put a lot of capital into these higher risk earnings trades. We put most of our capital in the higher probability of profit trades that have lower risk. If you are interested in those trades, we'll put a link to our website up here. Let us know in the comments below. Do you think Taiwan Semiconductor will crash down after earnings as these unusual options suggest? As usual, please hit the like button, subscribe if you haven't. Take care and have a wonderful day.